Welcome back to Explain the Charts, where we break down the most impactful movements in the market. Today, we're putting Microsoft, ticker Microsoft, under the microscope, and there's certainly a lot to discuss given its recent volatility. First, let's establish the broader context with the latest news and analyst sentiment. Microsoft is enjoying overwhelming positive sentiment from analysts, with many issuing a strong buy rating. The consensus 12-month price target is approximately $622.37, suggesting a significant upside from its current price around $522. This bullish outlook is largely fueled by Microsoft's exceptional fiscal Q4 results, which comfortably surpassed expectations. Revenue surged to $76.44 billion, primarily driven by its intelligent cloud segment, including Azure, which saw a robust 26% year-over-year increase. The insatiable demand for Microsoft's AI offerings is clearly a major catalyst, with Azure revenue alone exceeding $75 billion, a 34% jump. The company is committed to this growth, planning to spend a substantial $30 billion in capital expenditures in its fiscal first quarter, a strong indicator of continued investment in cloud and AI infrastructure. Despite this overwhelmingly positive backdrop, there are a few cautionary notes worth mentioning, which we'll see reflected in the charts. Microsoft stock is currently trading at a high valuation, implying that investors have very high expectations for future growth. Additionally, there was a recent executive insider sale totaling approximately $2.6 million, an 11% reduction in holding size. While not necessarily alarming on its own, it's something to monitor, especially with discussions around potential execution and data center capacity constraints related to AI initiatives. Now, let's shift our focus to the charts and see how these news items are playing out. Looking at the one-day chart for Microsoft, we can clearly see a strong bullish trend that has been in play for quite some time, with the stock consistently making higher highs and higher lows. However, the most recent price action in late July and early August provides a fascinating case study. Notice this massive candle on July 31, 2025, opening around $555.22 after closing the previous day around $513.24. This significant gap up is a direct reflection of the stellar Q4 earnings report we just discussed. However, the day concluded with a considerable sell-off, closing around $533.50, indicating heavy profit-taking and perhaps a realization of the high valuation concerns. This price level, around $555 to $560, now represents a strong overhead resistance, marking the stock's all-time high observed in this data. Zooming out again on the daily chart, let's identify some crucial support and resistance levels. The price drop from the July 31 highs has brought Microsoft down to test a key support region around $519 to $522, where it has bounced off repeatedly in the past few days. This area aligns with previous consolidation points, making it a critical level for bulls to defend. Looking further back, the previous major support level around $390 to $400, established during a significant dip in April 2025, shows how much the stock has advanced since then. The area around $470 to $480, which acted as resistance in late June 2025, has since been decisively broken and could now serve as a strong secondary support if the current $519 to $522 level fails. A clear reversal pattern is not yet confirmed on the daily chart post-earnings, but the stock is holding above that immediate support. Now, let's get more granular and look at the one-hour chart to understand the short-term dynamics following the earnings announcement. Here, you can clearly see the dramatic gap up at the opening on July 31, touching highs over $560 before quickly retreating. This rapid sell-off within hours after the open illustrates the intensity of the profit-taking. The stock then entered a consolidation phase, oscillating between approximately $520 and $538 through early August. This tight range suggests indecision among traders, with buyers stepping in around $520 and sellers emerging near $538. This range defines our immediate short-term trading boundaries, with $520 acting as strong hourly support and $538 as hourly resistance. A break above $538 on increased volume would indicate renewed bullish momentum, targeting the previous highs. Shifting to the 15-minute chart, we gain an even finer perspective on the most recent intraday movements from August 11th to 14th. You can observe tight price action and relatively lower volumes compared to the earnings day volatility. On August 11th, price saw a dip to around $519.72 before finding support and climbing back. This reemphasizes the $519 to $520 zone as a significant short-term floor. On August 12th and 13th, the price largely traded between $522 and $530, with attempts to break higher often met with selling pressure. The consistent rejection around $529 to $530 in these short timeframes confirms it as immediate intraday resistance. For short-term traders, buying near $520 to $522 support and selling into $529 to $530 resistance could offer opportunities, but watch for clear breakouts. Volume spikes accompanying any significant price movement will be key indicators for conviction in either direction. To recap, here are the crucial price levels for Microsoft. The primary support zone is around $519 to $522, representing the recent lows that bulls must defend. A break below this could signal further downside to the $470 to $480 region, which was a previous resistance now turned support. On the upside, immediate resistance is found around $529 to $530, where the stock has struggled to break higher in the past few days. A more significant resistance and the all-time high is at $555 to $560, a level that saw strong selling pressure post-earnings. In the short term, a bounce from the $519 to $522 support towards $529 to $530 is highly probable, especially if the broader market remains stable. Long term, breaching the $555 to $560 all-time high, potentially on strong continued news around AI and cloud growth, could lead to the analyst target range of $610 to $620. However, given the high valuation, any negative news or broader market weakness could see Microsoft retesting lower supports. Watch for increased volume on any significant moves. Low volume breakouts or breakdowns might be unreliable. Also, keep an eye on Microsoft's ongoing AI developments and any updates regarding data center capacity, as these will heavily influence future price action.